Hi, I'm Bonnie Nussin. I am doing the reconciliation procedure, which is exercise number 8. I work mostly from the hardbound book, and question 8 is different in the hardbound book than it is in the online. And so I had already prepared this when I noticed that. So the question is, the following reconciliation items are applicable to the bank reconciliation for Ford Company. Indicate how each item should be shown on a bank reconciliation. Outstanding checks, bank debit memorandum for service charge, bank credit memorandum for collecting an electronic funds transfer, and deposit in transit. So before we get started, I was writing down some information for the reconciliation procedure. Typically, when we do a reconciliation, there are two reasons why it's done. The bank has different records than the company does. For those of you who have ever written a check before, what we typically would do is we write a check, we would enter the amount and deduct it from the balance. And showing what we have in our account. But that's not really what we had in our account because it takes a few days for that check to run through the bank. And so to even up the records, you have to do a bank reconciliation. Okay, so, and part of the reason they did that is because there was two causes. First of all, the accounting, the entries were different because your book said one thing and the bank said another thing. And then sometimes we had errors in the log. So somebody may have recorded the 353 and another one may have recorded 323. So just fixing those errors. The book had also said that the person who prepares the bank reconciliation is usually someone who doesn't have the responsibilities in working with cash. And this is to prevent fraud. Okay. And so step 1 is deposit in transit, and this is where we add. And so as I went through and added the information, we have cash balances per bank statement, and we had a total. So we looked at our bank statement, and this is what our cash balances came to. And we have $15,907.48, and then we add deposits in transit, and this is our total, $2,201.40, and that brought us to a total of $18,108.85. And then we subtract the outstanding checks that are in transit. So we list the numbers. I've got number 400, 401, 402, and their amounts. And then you total those up and put them here. And then you add those. Actually, you subtract those from the 18,000, and that gives you a total of 12,204.85. Scrolling down, as you notice, I put, and I don't know if I said this because I've recorded this many times, I have put those items that we are looking for in red so that it'll help you find them. Add deposits in transit, minus, so less outstanding checks, and then we have the adjusted cash balances per bank. And that gives us the 12,204.85. And then we added the cash balance per books, and it was 11,709.45. We add any electronic transfer funds that were received, and we totaled that here, and then any errors in recording checks. We had an error in check number 443. That was $36. We totaled those. We came to $1,071, and then we added that to the cash balance for the books. And then we had less non-sufficient fund checks, and that was added here. actually subtracted here, but we grouped them together, added them up, subtracted them from the error. So we had debit and credit card fees, bank service charge, add those here, adjusted cash balance per books, and the grand total is $12,204.85. So as you look at the book, in my book it's on page 346. It says the reconciliation items per bank. So first of all, the person would come and do the reconciliation for the bank. They would put in the deposit in transit, and they would add those items. And then you would subtract the outstanding checks. And then you would add or subtract any bank errors that you had. And then once this was done, they would go back and they would do the reconciling items for the books. And they would do the same thing. Other items you add as you're comparing the deposits in the bank statements with the company records. Step 2 is other items, other payments, and those are subtracted, and the company will have already recorded electronic payments. And then step 3 is any book errors, where you would add or subtract them. Okay? All right. If you have any other questions, please let me know.